A lot of people want to get into real estate investing to replace their income to reach that financial freedom, but most people are actually doing it wrong. Real estate investing is not get rich quick, it's get rich guaranteed over time. And you gotta have that long-term vision for the next 5 to 10 years. In today's video, I'm gonna break down my own vision for the next 5 to 10 years for my company and why we pivot into this space, why this makes sense. And at the end of this video, I'll even show you my ultimate vision in this real estate journey.
It was, presented to us on a tour we would take, right? We would take tours with students. This one, Jonah, was presented to everybody on the tour and we liked it. And we told everybody we liked it.
Yeah.
And no one bought it.
The truth is that deal was basically shared in the group for probably like, I think 2 weeks. And then nobody pulled the trigger. It was an off-market deal ready to be listed, pocket listing. But I think part of the reason why people are not pulling the trigger was there were a few moving parts at the time. And also the experience in that specific house wasn't that great. The smell was bad. And then also that you can see that the work needs to go in there, right? So people were kind of scared. But for us, we're so used to doing an active project like that.
We smelled money.
Yeah, okay, now everybody's not as interested. Typically means that we have a little bit more room for negotiation. And at the end of the day, you just rip out the hard price saying all that smell is going to be gone.
Hey, they didn't even actually, when we sent all the workers in, multiple different people told us don't rip it out, just clean them. So we actually didn't even rip the carpets out, we cleaned the carpets.
Which is crazy. This tells us, I think that taught us a very valuable lesson, which is the standard for our city versus their city is very, very different.
There's two tricky parts. One was the roof, and just getting that at an affordable price took a lot of hustling, right? And then the other one was the basement, because we wanted to, there was an unfinished bathroom, and this is kind of along the lines of what you said, right? We originally were gonna put the leftover flooring in the storage room, so it would be more of a finished room, and we were gonna finish that other bathroom nicely, but that eventually it just was didn't make sense from a cost perspective to do all that work in the basement. So we just ended up doing a very basic finish in the bathroom, getting it very functional and refreshed. Again, it was much more cost effective, and it kept us in a really good budget to where we rented it out. At some point, we're just you know what, the market had already exploded in the renovation time.
It's very interesting because I think 10 out of 10 Canadians will over renovate the properties down there. Because for us, think about how many projects that we tried to handle, and then for the first I think 2 or 3, it was all over renovated because we're kind of using our standard, in Canada into the States. And the biggest issue is that we didn't even know that laundry shouldn't be provided for the rental. They're not used to heavily laundry. No appliances either. And a lot of people can understand that because we're just so used to how everything's operated here. And that's one of the learning curve, right? Even basement, not having a finished basement to a lot of Canadians, it's a very weird thought because our affordability is very, very low. We need to have additional units to facilitate or to have either other tenants or family members to kind of help you, reduce that financial burden. But in the States, every property is $100K. You don't need that.
And in the beginning, even that's something we learned very early. It's the cost to finish the basement. You just go buy another house if you want to do a legal duplex. No one's finishing their basements. Then we eventually found a really good investor-focused realtor who was locked in. Even we almost ran into we talked to them and we were dealing with some realtors who now we know were actually they're specifically known for scamming foreign investors, right? And taking advantage of foreign investors.
The standard is very different over there, very inconsistent.
That was crazy. But then, so then after
we get out of Jonah, now we're going on to okay, how can we really scale this up 100x? We started figuring out a lot of things, obviously the deal sourcing.
I mean, what would you say was the biggest pain point when we were figuring that out?
I think the biggest breakthrough is to understand the market, understand that how to leverage the data in the States. Most of the time, we're so used to having the deal fed to us through realtors, sometimes property managers, or even wholesalers in Canada, but that's it. Kind of running the marketing campaign to get the sellers to reach out to you. It's not something that's that common in Canada. So in the States, a couple of things that we quickly figured out. One is what is the actual scalable model, right? Because BURR strategy, if you just buy anything on Zillow, on the market, it literally won't work. 20, 30K in that affordable market is already a lot. That itself is the renovation budget. So we're not just negotiating a little bit, we need to negotiate a lot more. So the ARV, I guess the purchase price is typically needs to be around 50, 60% of the ARV in order for BURR to truly happen, a perfect BURR. I think the very first thing that we did is we started really looking into the data. How do we actually get that delinquent sellers list? How do we get in front of them? How do we cut out all the middlemen? Once we figure that out, then we realize that, okay, every single project now can be you can pull majority of the capital out if you can go off market. So that's the very first thing. And the second thing that we also figured out is like how to really manage the renovation crew remotely. How do we build a relationship? How do we set up the different teams in different locations, in different type of neighborhoods, right? And really do the cost down and avoid this being scammed by the contractors. These are the two major things that took place in order for us to be like, okay, this market definitely started making a lot more sense than anything we see in Canada.
Exactly. So I think that's a natural like progression where like we're locking down the deal flow, the contractors kind of have everything figured out. So then the natural next step is
it's always like growing into either through volume or bigger deals, right? So obviously we've been doing a lot more volumes right now for anything under like 2 units, 2 to 3 units, the residential side of things. Multifamily is something that we're constantly looking into as well. And then we're part of a couple of buildings, couple of projects like that. And by the way, for people who don't actually understand the affordability side of things, 7-unit building costs about roughly 500K, right? 6 to 8 unit building roughly is around like 600K as well, right? So just depending on what area you're in, you can't even buy a condo with that price here in GTA or in Vancouver, in Calgary. So over there, you end up getting like 6 to 8 tenants paying you rent, and you can decide if you want to do Section 8, if you want to do retail tenancy, if you want to do Airbnb with furnished rental for travel nurses and all that stuff. So the flexibility over there is a lot more because how cheap and affordable each project is. Naturally speaking, it's just like moving into more like apartment buildings where DSA alone or the new appraised value can be done like in a very predictable way because we just need to change the rent. On the flip side, it's also just doing more residential deals like what we talk about, buying it for 40-50% of ARV, do cheap renovation. You buy cheap, you buy low, and you cash out refi, we just sell it to the out-of-state investors for turnkey properties. So this model has been scaling pretty quickly, and that's why we like to let people know that the 2 easiest way for scaling point is you flip one, you hold one, or you BURR one. That way you maintain your cash reserve. Second thing is that once you prove the concept for 2 units, get into 6 units right away, because this long term will make sense and it'll allow you to be able to pull the capital out. Okay, so that's what we have been doing. That's what we have been advising our members to do, and a lot of people, we started seeing them falling into this type of pathway.
Yeah, we have seen an uptick, people closing on larger buildings, like above 4 units. So what would you say, like, what size of building do you think we should get into next, and how should we structure it with the group?
Continue doing like anything between like the 6, 12, or even like 20 unit building, because those are still relatively affordable to us. The goal here is not to grow super fast, it's just to grow steady, maintain the active income cash flow for us, and scaling at the right pace. Because right now, real estate market, at the end of the day, the interest rate is still a little bit high compared to a while ago. So you just need to accumulate and watch your cash flow, and without going too crazy with our portfolio. The next step, by the way, this is also part of the reason why we started a community, right? Most people think that, oh, they're running coaching, they're just one of another coaching company who teach but don't really do the investment themselves. Or the opposite. We're doing this, basically, we actually care a lot about everybody's growth because this is our recruiting platform, which is what most people are, I guess, not paying attention to. We're doing the exact same thing every single day, but we're also coaching other people exactly how to do it so that when they can start acquiring properties, they're going to get trained to look at the deals the same way. Some of them have a lot of capital, a lot of HELOC, access to a HELOC. They end up becoming our money partners as well. So that's what we've been trying to do. The more that we can grow this, the more people that can join this and see our vision, see our operating system, the trust and loyalty will get built. And this is where a lot of collaboration can happen.
So we do a few, the plans to do a few larger buildings. Where do you roll it into from there? What's the next steps even after that?
I think we've been talking about this, right? Like the ultimate goal here is going to be running a fund. And in order for us to run the fund and start raising capital aggressively, the business model has to be solid, which is what we've been trying to prove the concept on. I think we're getting very close to where we need to be. There's a few more boots on the ground operation that we still need to figure out, and also the scaling point, and also prediction on whether or not this model can carry on for the next 2, 3, 4 years. Once those pieces are in place and the community is in a more stable position, the next step for us is to get a fund, start raising capital before we even have the deals, and then just inject into this whole ecosystem. Starting point for the fund might actually just be $1 million, nothing crazy, because $1 million will give us probably like 5 projects.
We could probably get that like 3 to 4 people.
Yeah, we got so many people with over like 500K, saving or HELOC. Some people even have like 800K.
There's just a lot of capital in the community, which is something I didn't expect so fast.
It almost created the delusion that we're in such a strong economy. Like Canadian has a strong economy, but I think it's also because of the way that we conduct ourselves and the way that we attract these type of investors in.
We'll see how it goes. We're gonna push for that to do like maybe 2 or 3 large projects. Make sure that the returns are good, the refi or the sale is good. Yeah, from there we'll go into the fund and then just keep doing that on a larger scale. I think it'll be really fun to like scale things to that level and people to see that and be like, every year people look at us and like, well, from last year you guys are like crazy.
Another thing that I wanted to mention is that business credit and the business loan opportunities for Canadian who end up building their US credit a little bit. Like honestly, there's so much money that you can get. I think these stats that average a Canadian with a little bit of a US credit build up for the next like 6 to 12 months. I think on average of 72K, just in business loan. And that once you get that set up, you can literally pull that capital and use that towards your first down payment. So starting this process early, honestly, is probably the most important thing because you started getting the benefits of a financing loan and scalability in the US market. So yeah, that's why we highly recommend that if you have a couple properties in Canada already in tier 1 city, hold on to it for appreciation, equities and all that stuff. But your next project really should be in more like long-term thinking. It needs to be in the States. Think about what you can build and scale in the next 5 to 10 years. A lot of us have been stuck. If it wasn't for the US market, we wouldn't be scaling the same way in the past 3-4 years.